I mean, we're looking at actually significantly lower levels into correction territory. We're not in a bear market yet. Bear market is 20%, but
Is your portfolio hurt? I know I'm mostly in cash, but is your portfolio kind of bleeding or?
oh yeah, I'm bleeding for sure. I mean, compared to like my last 2 years, which have gone parabolic, the only and I do own just
Can you actually share your returns for the last 2 years? I know they've been really good, but I don't
yeah,
know.
I've shared my return. Oh gosh, the last 2 years I'm sitting at like 70% ish last year, and then the year before I don't want to make up numbers because would have to go back and look. But last year, I know for sure was in the 70% range. Now, starting off this year, the first 3 months have been really rough. I think I'm down. I'm going to calculate how much I'm down. It's not a tremendously huge amount but let's say the S&P is down 10%, and then gold and silver. Yeah, I'm probably down 10 to 12% so far this year, I think. Probably about
Okay.
10 to 12%, I think. No, wait, probably not that much. I'd have to look. I'm just guessing numbers. I'd have to look. I actually don't think it's because I wasn't buying exactly at the high.
You don't do
Right?
monthly checkups on your performance and all
Yeah,
that?
I'd have to check up. I'll tell you what. Next week I'll check up on my performance. I would say I'm in single digits lower. I know for sure. To this much, I'm just being
Okay.
completely transparent. I am down this year so far, year to date from January 1st to
If you're my investment manager, you'd be fired. Just kidding.
3 months. Yeah, 3 months. Yeah, right. Well, Dylan. Well, Dylan, you know what I mean? Where are you? You know what I
Well,
mean?
I'm actually up for the year, but I've
Oh,
been,
good.
I've been pretty much cash based because of my main investment has been drifting down. So I just been mostly in cash. So
Hmm. Yeah, so I
so
still believe,
I'm up like 5% for the year, but
yeah, that's
it's
pretty
just
good. That's pretty good. Yeah, I'm
I
probably
didn't
down.
foresee this happening though, to be honest. I thought Trump was still going as Prince of Peace. Apparently I didn't spell it right,
Yeah, PIE. Yeah,
PIECE instead of
yeah, right.
PEACE. Oh, my bad, my bad.
No. But and that's the thing is that I think at the beginning of the year, this is something you just really don't predict. Um, and that's the crazy thing about like nobody could have, and that's one thing actually we should talk about is nobody can really predict what happens in the future, right? This is why I always like to have a lot of
Not
dry
about
powder.
nobody, but it's certainly like no one I know or that's going to let me know or you know.
Yeah, right. And I'm talking about worldly events that are just acts of God or whatever, like COVID-19. Who could have predicted that?
Well, I know one rich guy that had a heads up on the lockdown. So if
Mm-hmm.
he sold, if he bought puts, he would have made a lot of money.
Mm-hmm. Well,
He had a heads up about 3 days before, the
3 days.
lockdown
Okay, but
was
I'm talking
13th, I
about,
think. And
yeah,
he got
I'm
a
not
heads
talking
up
about
on like
days.
the 10th or 11th.
Yeah, I'm talking about, okay, yeah, maybe you can get a day or two, you know what I mean, day, but you're not going to get months in advance. None of us
Yeah.
would have predicted this. You know what I mean? None of us would have predicted this, like, whatever. But I guess it goes to, for me, again, this is my investment philosophy. I don't know where Dylan is on this, but that's why I always keep at least, I'm never fully invested. Dylan knows this for sure.
Yes.
I never ever get fully invested. I always keep at least 20% on there, but that is going down, right? I always keep at least 20% cash for
What
moments
if the
like
stock
this.
market had a huge correction? It was like 75% off, and all the fundamentals were all the same. Flash crash. You
What would
wouldn't go
I do?
100%. You wouldn't go 100% if there was like a flash crash.
Oh,
All the fundamentals are the
that's a
same
great question. No, I don't think so. I would use probably like 75% of the
of your
twenty
cash
percent. You
account.
follow me?
Yeah.
I always yeah, I do. The more it goes down, the more the cash gets deployed. So it's like cost averaging on the way down. Does that make sense?
Yeah.
Your cost averaging, but no, cost averaging more on the way down, more sliding on a heavier scale on the way down. Does that make sense? So it's
I think
like
so.
if it's down 5%, right? You put in 10%. And if it's down 20%, you put in, 25% of that 100% you have. You follow me?
Yeah.
You keep on doing more on the way down. So that's how I do it. But again, everybody has different things. But for right now, with the VIX at well over 30, you know what I mean? It still is. I'm gonna stick to my guns. If you're in this market for at least 2 to 5 years, you can buy here with almost no problem. I don't think you're gonna have. I don't think you're gonna get hurt at all. Now, if your time horizon is months, I don't know. I can't predict that.
Fuck.
You know what I mean? I can't predict that. I don't know. What do you think? What do you think?
Yeah, I mean, I was obviously we had our predictions on how low the stock market would go earlier. You were right. You were a little bit more pessimistic. You've been right so far. I think it's even dipped below your low, and you were the lower of us too. So yeah, I mean, but I still think it's not the market's going to be able to reprice it and kind of carry on from where it is and carry its march back on forward. I don't really think this is a World War III scenario or the end of the United States or anything like that. Although you know, I, I was much more worried about the Ukraine Russia war because that was a bit more World War III ish. This is not a major world power, so I don't really see that as a possibility. So yeah, I think the market will get over it and keep going relatively quickly. So I would say, buy the dip.
So would you say the okay? So I think if
I mean, I'm
again,
not buying the S&P 500 because that's not my cup of tea. But yeah,
yeah, but let's just say okay. You said the market was at would finish about 7,500. We're at 63.72, right? So that's
it's a
wow.
nice return.
That would
Buy
be
S&P
a hell.
500.
That would be a
My
hell
prediction
of
is
a return.
correct, and you have a great year.
That would be a hell of a return if you bought it. The thing is if it keeps on going down, man, they meaning Morgan Stanley and all those they're gonna redo their final analysis um on the S&P. I think if this thing keeps going down. Now, look, do I see it going? I don't know what the bottom is. I guess that's the next question is how far do you see this thing going? Just again, remember, we're just kids. We're just doing it. We're just guessing, guys. Just for
Kids, yeah, I
our,
just turned
we're
18
not
yesterday.
financial. We're not financial. Whatever you do with your money as you please. So this is just for fun. So what do you think? I'll have you go first. How
Yeah,
low
I
does it
think
go?
yeah, I think this is close to the bottom. I mean, if I was deploying SP 500 capital, probably see where it opens on Monday, and then start deploying capital. If I was managing a large sum, where the SP 500 was, one of my vehicles I was using. I was deploying next week. Right now it seems like maximum fear or whatever. I mean, maybe not maximum, but it's a good buying opportunity. Like you said, like we could get some freak out, Iran bombs Paris or something like that. And, the market will go even lower if that happens. So, uh, yeah, I mean, there's a sort of black swan possibility of lower, but, black swans don't happen that much. So I would say it's a good buying opportunity, this coming week.
Well, I will say this with now the last month because of the way the oil is going. Anytime, and you'll see this, you guys can see this through charts if you want, is anytime oil goes up, the market goes down. So there's a
Yeah.
correlation. There's a
Yeah.
big
It's
time
a correlation.
correlation.
Yeah.
So I do own Exxon for exactly moments like this. You know what I mean? But the issue is Exxon is such a small percentage of the market, or oil stocks. Let me rephrase that. Well, Exxon is even smaller, but oil stocks are such a small percentage of the market compared to your biotechs, compared to your tech companies, compared to your staples, et cetera, right?
Yeah.
It's in the single percentage. So, and not a lot of, I mean, I own it, but not a lot of people own it. And that's exactly why I own something like Dylan's known. I've owned Exxon for years, and we were talking off camera that I thought it was dead money for a long time. I mean, it was
Now
sitting.
you don't feel like that, probably.
No, I don't because that's not what it's there for. You know what I mean?
I need
So
to sell half, like you were talking about
yeah,
before.
well, yeah, we were
Before we
talking about
started the
because
episode.
okay. So I'm going to tell the audience. So going back, I bought it in the 70
I mean,
range.
you sold gold pretty much at the top. You looked like a genius,
Yeah, I sold, but
Well, not really your whole position, obviously, but
some of it, you know what I mean? But I
yeah.
don't ever sell all of it, you know what I
Oh,
mean?
yeah.
But I did, what do they call it? Take a little bit. I wish I would have taken more, but it's, you know what I mean? But
Take
it was
profits, right? Take profits.
take some profits. Yeah, it took some profits, you know what I mean? But
Yeah,
again,
or rebalance your portfolio, however you want to say that.
right. And here's the issue, audience and Dylan, is that like, what do you deploy that capital in? You know what I mean? Because right
Yeah, where do
now,
you put it now?
everything's going
T-bills?
down. For me, actually, I'm gonna give you guys a heads up. I name the country, but I will be doing this podcast in another country in a little bit. Stay tuned. You know what I mean? You may see it.
Yeah, yeah. What, 2 weeks, right?
Couple weeks, yeah, in a couple weeks, and Dylan will be there with me. So yeah, I can deploy the capital to
I
spending
won't
the
be
money,
in the
which is
country
fun.
with you. I'll be in the episode. I'll be on the episode.
Oh, you'll be. Oh yeah. Don't worry, folks. Dylan's the star. You'll be on the episodes as
Going
well.
with you physically.
Yeah, yeah, not with me physically, but on the episode, yeah.
Yeah, yeah.
But yeah,
I
so
wouldn't mind
that's
though.
another it's another hedge, guys. Like some stuff for here are hedges, in case of bad economies, you've got real estate, gold, silver. Oh, not so much silver, actually, not so much silver. Gold more than silver. Gold and bonds, you know what I mean, et cetera. Those are ways to kind of protect yourself. I'm not a big fan of bonds, by the way, or
Oh,
cash. I think you get better growth, especially for people who are younger. Now, for people who are older, you may need that capital to be more conservative. Like some people are much more conservative. I still consider myself pretty conservative, even for my age. Really, honestly, even though I've had great returns, I'm very more conservative than somebody like Dylan. So it all depends on your investment portfolio. Oh, here's a trick somebody told me, and it wasn't you. To see if you are a conservative investment, and I posed this question to my father, posed this question to you, Dylan. Maybe you remember this, and this is a great. I should timestamp this because this is a really important question. So if I were to add, I'm going to just use you as the example, Dylan, since you're here. If I were to add all your net wealth, everything you own, your cars, your house, your whatever, furniture, etc., like, and I were to put it all in the market. Now, nobody wants to lose anything. What is the most comfortable amount you wouldn't mind to lose? You want to gain, of course, but what percentage do you not mind losing?
I forget this question. If you asked me earlier,
I did
what
ask you
percent
earlier. So if I were to
like
add
your net worth, you wouldn't mind losing your net worth.
your net worth, right? What
Yeah,
percentage
yeah. I'm
of
willing to
net?
go to zero. I'm willing to go to zero.
Okay,
Personally.
good. If you're willing to go to zero, right?
Yeah.
You're
Yeah.
very, 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 very aggressive investor. You should be all in stocks.
Well, actually, now that I got my house, I will not. I will change that datum because now that I got have had my house for 1 month, so the numbers doesn't really make sense for me to go completely to zero. So I would say like 5K, 10K, something like that.
Oh, like 5%, 5%, 10. Oh, you would
But
be
ten
willing to
thousand
say.
meaning X
Oh,
number of
you want to
months
say
mortgage
okay.
payment.
So it's like still you'd be like okay. So let's say
Just
whatever.
because with the house, you have your main downside is missing a mortgage payment or missing a few, and then your whole investment is basically lost.
Right,
You
right, right, right. So
lose your
yeah, now
investment,
you're
you
becoming
lose your
slightly.
equity, all that.
Yeah, now you're becoming slightly more conservative. Whereas when I first met you, you said I'm willing to use it all. But now that you own a house and probably have more responsibilities, you're moving more conservative. It's a great question to ask people to figure out where.
Sure. But I will say,
Okay.
if I paid my house off like in cash completely, I would say back to zero.
Right, 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 right. So
Oh
yeah,
wait, actually, because technically your house is your net worth, would I be willing to take a HELOC on the house for an investment? So I guess, yeah, I guess I am more conservative because once I pay off the house, I wouldn't want to touch the money in the house. I don't think.
so let's just call you. Let's just say if you had $1 million, you'd be willing to do 900,000, right?
Yeah, there you go.
And that's fair. So it's like that would be what
90%.
90% stocks, maybe 10% gold or 10%, you know what I mean, or
Bonds or
probably not,
cash
or
or
maybe not
whatever.
even
Yeah.
cash, you know what I mean, but 10% something else other than
Yeah,
stocks,
yeah, mix.
whatever. Yeah, yeah. So that's a good way to kind of ask people ask people that on their risk tolerance.
Yeah, yeah, I guess I'm pretty high risk. I mean, not as much as some of my friends I talk to, and they're like, "Oh, I read about a stock and I put 100K into it." I'm like, "You don't even know what they make? Don't
Mhm.
they make like something or other?" And I'm like, "Okay, I'm sorry, I can't do
Yeah,
that."
yeah. So we don't know exactly where this war is going. Obviously, we've touched on it a little bit. The Strait of Hormuz is obviously very important. Obviously, a lot of the Asian countries and Pakistan and some African countries are going into their strategic petroleum reserves. So it's hitting the market, right? I mean, hitting their economies, not the market. It's hitting their economies, right? But they're still chugging along for now. But eventually, what's going to happen is that, like I said, if the oil keeps going up, we could be in an environment where you're going to have low growth, high inflation, right? Stag and we slight stagflation if we keep oil above 100 for months. That I think we can both agree, or maybe you don't agree, but I think we both agree. If oil stays up at this level for months, the world is in trouble. Economics.
Yeah, I mean, minus the oil producers, obviously,
Right.
and the U.S. being one of those. But yeah, I mean, it's bad for the rest of the non-oil world, basically, because it's such a high like tax, quote unquote. So it makes it hard to do business and hard to stay profitable and all that. So yeah, I'll agree. It's definitely would be rough for the rest of the economy.
Mhm.
So yeah, I mean, I think that the U.S. is in a better position in a lot of places, being we produce so much oil ourselves. I'm assuming the oil price is going up here because we make at least roughly our own oil consumption. I'm assuming it's just going up with the shortage, the general global shortage. The prices are just going up with that.
Yeah, yeah. I mean, I think we discussed this before. America's almost self-sufficient with their oil, not quite, but again, even if you're
But in
not,
terms of barrels, last time I checked, they do more than the barrels they consume per day.
mhm. uh, yes,
Barrels
I
of
believe so.
production, barrels of
Yeah,
consumption. I forget
barrels.
what it
Are we
was.
talking
It
about
was
the
like
light sweet crude or the? Because there's two different types.
I know there's like a
Yeah.
swap, but I'm just saying if you're just doing not barrels to barrels, the produced and the consumed is production is slightly either. I mean, I can look it up right now.
Yeah, yeah. I'll
Just
look
to,
it up too, because the thing is,
yeah, I know. Normally we just ask people to look it up separately, but I'll just look it up right now because it's a pretty quick. It's too HTTP. This thing loads. What are the barrels produced per day of oil in the United States compared to the barrels consumed in the United States per day? Production 13.5 million, consumption. Oh wow. Consumption's gone up to 20 million today per day, and they only produce 13.5 million.
yeah. So they're not. I didn't think it was. I didn't think they produce everything. But I think if you add in Canada and Mexico, I think it's pretty much whatever. But yeah, they're not completely self-sufficient.
Huh. Yeah, last time I checked that number, give me like a span of like 10 or 15 years where compare oil production of the United States compared to oil consumption.
Oh no, I will admit
Can you
this.
highlight which, if any, years where the US was producing more than it was consuming? Let's see if it pops up any years where it was million per day consumption. Okay, so it's going up 5 million 2010, 11 million in 2000 or yeah, 11 million 2020, up to 13 million. Yeah, I guess it's never been over our consumption. Wow, interesting.
But
Consumption's
they
been
still
pretty
need to
stable
import.
according to this
But
chart
I
at
will tell you
around.
this: if you look
Go
at the
ahead.
chart, you know what I mean. Your consumption's going up slow, but your production's going up a lot. So it's
Yeah,
less.
production's been going up a lot. Yeah. That's probably
Yeah,
what it
yeah, that's
is.
probably what you meant. The
The
production's been
consumption's been
going up a
steady
lot.
at 20 million, 19, 20 million, and the production went from like 5 to like 13 in the last 10, 15 years. So that trend continues. The next 5 years, we're going to be producing a lot more
Yeah,
than a lot more,
yeah,
but more than we're consuming.
right. But yeah, so for today, yeah, that's why it still hits.
Yeah, that's a good point. So we are still buying and we're getting affected. Okay, cool. I thought I stand corrected here publicly. Public apology.
Yeah, that's okay. That's okay. But that's okay. So yeah, yeah, U.S. still does import some of its oil, but if you look at Canada, Canada produces 3 to 4. So if Canada, but Canada consumes some obviously, but not as much as U.S. But um, but you know,
Canada has a
obviously,
surplus, right? Because they're always
oh
shipping us.
yeah, Canada's is big time surplus. So yeah, and in fact, that brings us up to Canada. Is that Canada's probably one, assuming this war stays for a while, Canada's probably in a really good position because they're even more self-sufficient
In
than
the
really
U.S.
almost any country, really, because they've got the oil, they've got the food, they've got the land, they've got
They got the wood, they got all
the
kinds of
wood,
stuff,
everything
minerals and
like
all
that.
that. They got some
So, I mean,
manufacturing base going for them. So Canada's actually in a slightly better position than the U.S. in that sense, actually.
no, for sure, because those commodities are going to be worth. I mean,
More.
see, you'd think worth more, but now I don't know what's going on. Like because now
Gold dropped. Yeah,
gold
yeah.
gold's going down. Gold's got to be at least 10% off its high. Hold on, got to be at least ten
Yeah, yeah. It
percent,
broke
probably
five
more.
and now it's under 45. Yeah, yeah,
Yeah,
45.
because I remember it was
By the
yeah.
way, we always get a really good look at your necklace when you do this
Oh,
because I was
yeah,
looking at the screen there and like zoom in on your necklace practically.
yeah. Zoom in on that, but yeah, no,
Yeah.
no. So guys, I mean, I guess for the audience, I mean, this is again. Oh, by the way, might I add to our audience, we're a little choppy today because we're just kind of winging it, but we will go back to individual stocks. Don't worry, we're going to get back to it. We have busy lives, so just be patient with us. But we have been giving you very good information. A lot of the stuff we're doing here,
Buy the dip. Hey, is the media telling you that? No.
media is not telling you to buy the dip. We are telling you to buy the dip. VIX past 30, oil at 100. Middle Eastern stuff. If you go in, okay, yeah, go back in history and look at any Middle East war or whatever. Once it gets resolved, the market, I'm serious.
Yeah,
Once it gets
yeah,
resolved, the market goes back up. No
yeah.
question. If you're in this game long term, you'll do well. You will do well. Pick good, solid companies that are profitable or that have something that the market is overlooking, like a Summit or a Calcitron or and I think Nvidia at these levels is great. Is a really good deal. It's trading at 18, 19 times earnings now versus
Yeah, it's kind of wild,
oh
huh?
dude, it was trading at like well over 30. Now it's like 18, 19. So it's like it's finally caught up to where it probably should be. Like this is like its fair value price, but they're making so much money. I mean, like we're talking about like 70% margins, blowing out earnings, etc.
Do you
That's
think that the margins are sustainable over the long term, like competition?
Probably not, but still, um, they're the only like chip builder. I don't think anybody's really close to them right now in
Do you
terms
think they
of
got
chip
like a
building.
5 or 10 year moat?
5, 10 year, yeah, but 5, 10 year, I still think you can easily
Yeah,
double.
yeah, no shit. As long as their earning growth continues, like what? What? I mean, they
Yeah,
could
who's
price
gonna
it.
stop? Well, but here's the thing: who's gonna stop them? You know what I mean? Like they're like the only game in town right now. Like they're the
Yeah,
only game in town
like
right now.
when Ford was making his what is Model Ts or whatever, and he was like pricing them cheaper and cheaper every year. Like so many people just buying Fords. Like, how could you not buy one? They was affordable to the common man. five hundred
No, for
dollars
sure, for sure,
car.
for sure, and that's what I think. We got about 10 minutes
Did you
here.
hear that though? Yeah, yeah. But did you hear that Ford prices, even with inflation, because this is in the 20s and there was inflation and all that. So it says one wasn't before the Federal Reserve and all that. There was inflation. Even with inflation, he was pricing each new model a little cheaper.
Yeah, well,
He
smart
will
man.
always bring the price a little lower.
Yeah, smart man. Smart man.
Yeah.
Well, you know
That's
what? What I'll do for this podcast, since we only got 10 minutes, we'll just do this as a market update podcast. You know what I mean, or whatever.
sure. Yeah, yeah. Because
We
I know
only
you
got.
want to talk
I
about
can
silver,
wait.
but
I can save the
silver,
silver
yeah.
for next week. It's not going anywhere. Believe me.
It's too much market drama going on.
And I don't see it going out of business. But Dylan, I can give you the floor and talk about anything. I mean, I guess where I'm going at, folks, is don't panic for the Middle East. Panicking never made anybody any money. Believe me, the COVID was a much bigger deal than this. 2008 was a much bigger deal than this. Heck, I would agree with you. I think Ukraine was a bigger deal than this. And I was buying during
Yeah.
Ukraine. That's when I first put in a large amount of money, very large amount of money during Ukraine. But go ahead with. I'm sorry, I kind of interrupted you. Go
Yeah,
ahead.
I mean, you can also look back even earlier in history. You could look back to like, the Rothschilds buying when the Napoleon, the news of Napoleon winning at Waterloo or whatever, the fake news or whatever, that Napoleon won at Waterloo and all the US, or the US, England, the biggest stock market at the time, crashed, and the Rothschilds bought up, tons of stuff for, 10% of what it was trading for, last week, and just made a killing that way. There's plenty of other scenarios. Buying during the Great Depression, and he had a huge return. Even just Chris buying last year with the tariff tantrums, gaining what, like double on Nvidia or something like that. I don't know
Yeah,
about
yeah,
double
doubling
now,
on
but
Nvidia.
double compared
I
to its
was
latest
buying
high.
Nvidia. Sorry to interrupt you, Dylan, but yeah. Well, hold on. Is it double 90? So, yeah. Well, not now. Nvidia's down, but I guess yeah,
But I'm
close
just
to double.
saying early next
Yeah.
high, like
Right, right,
last
right.
big
Oh yeah,
high.
correct. Yeah, buying at Nvidia at whatever. Um, I do tend to think like normally if again, I wish I had a little bit more backup to make this statement, but I'm pretty sure it's true. If you mostly invest in the top 10 stocks each year, because they mostly do
10 market cap weighted? You mean like 10 meaning the highest market cap?
correct. The 10 market cap stocks, you normally do fairly well. Now, some of them get
You could have
cycled
bought
out.
like Sears like 30 years ago. You think you would do pretty well? Or Blockbuster?
Assuming you could cycle out of it in time. You know what I mean? Assuming you could
Oh,
cycle
like get
out of it.
out when they
You still
start
have to
dipping.
cycle, and that's the thing. You can't just stay in it forever. You do need to cycle it out, right? So, for example, like I think like Cisco, which still exists today, you still probably did okay. You know what I mean? During like the .com, I think it was like Cisco was big, Microsoft, which survived, it was big. Amazon was big, but like AOL, Time Warner, like they're nothing. And I think they're one
Yeah.
of the biggest. So you still have to do your homework.
Amazon was like a very small like market cap company back in
I
.com.
think so. Well, let me see
You
what
could
the
pull up its
biggest.
market cap, but I think it was like sub 100 million.
Well, let's see what the biggest market cap companies in tier 2000 was. Hold on a second.
Sure, you pull up a
That
list.
that
I'm
that
sure
that, that is.
it was
I'll
like
just read it off.
Cisco and what was the other darling, the internet darling back then? Um, Cisco. There was that one darling company that everyone owned. Not Microsoft.
Okay. Okay, I didn't know this. Okay, so here are the top 10 in the year 2000. Microsoft, where if you would have held that, you would have still been okay. So
Yeah.
let's assume like right now is Nvidia's Microsoft. You still do
Yeah,
okay.
yeah, there you go. It's gonna be okay in 20 years, but what one's not gonna be around?
General Electric, Cisco. Cisco's still around.
But
This
much
one,
smaller market cap. You would have taken a hit.
what's that?
You would have taken a hit if you just held Cisco for 20
Hold on, let me
years.
see. That's a great question. Let's see what happens if you would have taken, because I know it's still around, but I'm not sure if you would have made money because
It was the
you
last
probably
guy
wouldn't. You
that
probably
bought
wouldn't.
Cisco
It probably
stock.
wouldn't be worth it.
Some old guy that bought Cisco stock when he was like young.
Okay, so Cisco, huh? So Cisco, yeah, you would have basically made the same money. You would have been you basically would have made the same money because right now it's at its peak before was well before it got crazy 77 and now the stock is 79. So
Took 20 years to catch up.
20 years
Wow.
you do nothing.
God
20
dang.
20 years 20 years It's 20 years of nothing. You would have been you
Being a
would
loss for 20 years, you finally catch up.
yeah, it would
I
have
can
taken
finally
you
sell now. I'm not at a loss.
yeah, right, right. I finally caught up. So you need to actually that's actually a good point, Dylan. I'm glad actually we brought this up. You do need to be active. You can't just set it and forget it.
Yeah, I don't know. The Sears was a huge, but it was a big retail stock back, 30 years ago. So
Yeah, hold on. So this is what it was. To finish off, Microsoft, General Electric, Cisco, NTT, Docomo, okay, Walmart's still there,
yeah,
Exxon's still there, Intel's still there, Royal Dutch still there, Oracle's still there, and IBM's still there. But how did they perform? You know what I mean? Like,
I mean, Oracle's
it,
done well, but probably not amazing.
well, but even so, I'm thinking about this. Had you owned all 10 evenly, you probably wouldn't have done great, but you would have done okay,
Yeah.
right? You wouldn't have done amazing. Like what would have kept you
Walmart
in
did
was,
great, obviously, the last 20 years, I'm sure.
yeah, I mean, what would have kept you alive was Microsoft, Walmart, Exxon, Intel for sure. Oracle, I think they're doing good, and IBM. You think you would have done okay? I don't think you would have
Yeah, I mean, you
done
have dividends from Walmart and Exxon. I think some of the other ones have dividends too.
well. Let me ask this. Sorry again. Sorry, guys, for audience for doing this at this time, but this is the how me and Dylan work. Uh, we're intellectually curious. So I'm gonna ask AI: had you kept the top 10 market cap, would you have beat the market in 2000?
I would say no, but let's see what it says. You need some water or something?
Yeah, I do need some more. Hold on. Underperformed. Yep, you would have underperformed.
Figured.
Yeah, you would have underperformed. Um, I want to figure out by how much you would have underperformed. Oh yeah, oh yeah. So had you owned the 2000 top 10, look, you'd still be okay. I mean, you wouldn't be terrible. You're up 185%. I mean, it's not that great, actually. It's not that good, really. It's not that
For
great.
20 years. Inflation adjusted, isn't that just basically breaking
Yeah.
even? I mean, I guess not breaking even. Inflation adjusted hasn't been that much in 20 years, I don't think.
I want to see how much. Yeah, you're right. That is a great point. Inflation adjusted.
Why don't you throw that in the AI, inflation adjust those returns and see what it ends up
Yeah,
being? It's probably
yeah,
50% up or something.
Wow, it's really spinning.